Hey, good morning, everybody. Wanted to talk about GameStop, take a look at the option flow, take a look at that filing last night and after hours from Roaring Kitty on Chewy, and just take a look at some of the open interest, some of that net premium, take a look at the chart. Good mornings. It's about 8 a.m. New York time ahead of the market open. So let's get into some information here. We're going to go up to SEC's website. I use this often. You probably have seen me share multiple filings before from the SEC website. Comes here from the Edgar website. So I have the Chewy pulled up here, and we'll pull up that filing real quick from Mr. Roaring Kitty, aka Keith Gill, and this, or Keith Gill, pardon me. This was a 13G quarterly filing. So the rules with 13G filings, these are quarterly. So, for example, when he initiated his first filing that he had this position, the timeline on that was very quickly that he had to file that. Now that he was in the stock, the 13G, if you note the date of event, which requires filing of the statement September 30th, that's the quarter three end. That's what's required on the Schedule 13G filing. So the date of the event, which requires the filing, might appear as if he was sold on September 30th, but basically what this indicates is as of September 30th, he no longer had that position. Now, his last post on X was back on, let's see here, I believe September 6th. We'll pull that up real quick. I believe, that's just my opinion, speculation. I'm not trading his book, so I don't know, but my speculation is his last post was on September 6th. We kind of got the hint that he was done with Chewy, and that was at 11 a.m. Central Time, 12 p.m. New York. So, was he done then? Was he done before? I'm not sure, but that's where that filing and that's where that kind of speculation came from with September 6th. But if we go back over to the filing here, he didn't mark I am a cat or I'm not a cat this time, decided to leave that off. But this did get submitted yesterday on National Cat Day. Zero shares, 0% ownership. It was covered, it was posted in after hours, which actually brought the stock, Chewy stock, down just a little bit, and it caused a spike in GameStop. Let me turn on extended hours trading data so we can take a look at how that went down in the after hours, and then we'll get into some of that option flow. So let's see, here was about the time the filing came in. Get to the time here. See some of that volume and then the pop in the price. Because I think the filing time, double check that here again. I think it was came right at, it was close to 420, I know, because it was a meme in that regard. Yeah, the time was 423 Eastern time. So he might have submitted it at 420 and then it actually became accepted and available on the US, on the SEC website there at 423. But that's where we saw some of that activity then in the stock. Because our high, let's see, after hours high yesterday did reach as high as 24. And then some overnight trading there on Robinhood. And then now this morning, let's see where we're at here. Yeah, there was our high last night to end the after hours at 24, and then a high so far in the early pre-market 23.83. So stock's 23.60 currently. Yeah, responded. There's been a lot of speculation now that Kitty's out of Chewy. You know, has he been doubling down on GameStop? You know, that's something a lot of people have talked about. I know it was kind of something I had speculated on. I want to draw back to the post. I remember on September 20th, that 4.6 million share come through in the dark pool early in the morning for GameStop. Now that is a buyer and a seller. You know, without a buyer or a seller, there is no order. An order needs a buyer and a seller, so that's not really denoted there per se. And it was September 20th was the monthly option expiration date. So sometimes you'll have high volume those days, you know, relating to options, and or it was close to quarter three in, you know, ETF index rebalancing in that regard. So it was just kind of something we had looked at, we had talked about, we had kind of filed it away, but then it kind of came back up again, you know, with yesterday's news on the Chewy filing. Kind of talked about some option flow yesterday. But yeah, it was just kind of yesterday I talked about, just hear me out. Did RK buy more GME with his proceeds from Chewy? Not my business, not my place, but a lot of speculation around the name, and we'll continue to talk about it. But just speculation, but I'll continue to watch price levels, volume, options flow, and then just talking about some of those times when we caught the first calls back in May. I remember that. They started pouring in the last week of April. We saw some out of the money calls. This was back when GameStop was trading at $12. So that was definitely a fun time in May and June and July there. But let's jump over. Like I said, we looked at the chart, but let's jump over and take a look at that flow yesterday. We did see premium at 26,768,000 total premium, with a net premium though of only 166,000, and we'll drill into that. Looks like we had net put premium 261.5 and net call premium 433,000. So we can see net put premium kind of stay pretty much semi-flat, semi-elevated throughout the session. We do see a slight spike here in the net call premium, and stayed pretty much throughout the course of the day. The highest spike there at about 1.2 mil premium. Now, when we compare it to, say, like Monday, was a very exciting day. I know I got a lot of people excited, and we talked about that in yesterday's video. We had a net call premium nearing 5 million. So it was a pretty strong day in that regard. And then price pretty much stayed the same and pushed a little bit higher on Tuesday. So that's something you always see, like that continued follow through, continued volume. What's the options looking like? Year to date on GameStop, still 29.38% and 72% for the year. So not too bad. But let's zoom in here on some of the hottest contracts. You're welcome to pause or screenshot, do what you need here on the video. These were just the highest volume yesterday. We had the 25 calls, the 23s, the 30, 45, 20, 24, 20 for November 15th, and we'll talk about those. 22, 25 for the 15th, and 22 and a halves. Let's see, the 23 are in the money if the price stays. The 20 is in the money. 22, 24 is at the money, pretty close there. So let's take a look at some of the volume there. The highest around the 25, like I said, the 23, the 30, and the 45. Generally, what you see with GameStop, a lot of high volume on the weekly call options. But then every once in a while, you'll see some some more theta, some more time behind it, like the November 15th. And that's something we'll take a look at here when we pull up the hottest contracts. Let's look at that IV yesterday. About 77%. Okay. Total premium was 26 mil. Like I said, Monday was 34. And say for Friday, for example, was 11 mil. Last Thursday, 5. So Monday kind of stood out, And then with yesterday's filing and after hours on Tuesday, just a little bit more speculation, a lot of positive sentiment behind the stocks. So definitely something to keep your eyes on. Just keep your eyes on it. Watch your levels, watch your prices, manage your risk. And that's what's most important when it comes down to scenarios like this. But let's take a look at, like, for yesterday, we see that premium, 26 mil. Let's actually take a look. Where was that premium? Where did the bulk of that come from? So I know you've seen me post before where I'll put like open interest updates and top contracts by highest premium. This gives you a chance to kind of look at that with me here in real time. So instead of making a post, for example, with the threads, I know a lot of people like that. It's just another way to supplement that content and build on those ideas through the videos. So we'll take a look here. Top contracts by highest premium, so buying and selling. 2 million premium on the 20 calls for November 15th, and $20 calls for this week, 2 million in premium. And then the $20 calls for January, 1.65, and then the 23 calls for this week, 1 million. So if we look here, pretty close, 48, 50%. So you see the red and the green, red and green, red and green. See how they're kind of matched, half and half, buyers and sellers. Every once in a while you get a little more of a skew here, like here, 74% assumed ask side. Let's take a look at that. 2 million in premium on the $20 calls for this week. Let's take a look at actually what transpired there. We had 9,000 open interest yesterday, ahead of the 7,238 volume, but only, open interest changed negative 86, so pardon me, minus 86. So with all that volume, there was no change in open interest. 2 million there. Let's see, on the 28th, 1.8 mil. So these were bought, and then let's take a look at the last couple of days here. Sometimes we can see some of that pattern there. See bid, 8,000 volume, ask of buyers and sellers. That could be buying to exercise as well. It gives someone an opportunity. There was some multi-leg on those, so some of these could be connected to another side of a trade. You see the multi here, 32%. Let's see if we can drill in and find a possible other side of this. Good thing about using unusual whales, you see sometimes like a multi-leg trade, sometimes we can backtrack and follow that and try to see what's actually happening here. So let's look for some of the higher size in the premium. If we note, see the up and down arrow here, part of a multi-leg strategy, if you see that. This trade is part of a multi-leg option strategy, so it's detected kind of by unusual whales, usually by time and size, so we can drill down in even further. I always talk about how granular the platform is. This is kind of an example of that. So it looks like here a little bit of a setup here, a call debit spread. So that's where the multi-leg come from. So we give you a scenario here, selling 21 and a halves, buy the 20s, buy the 21 and a halves, buy the 20s. So call debit spread. This is what it detected though, was the 20 and the 21 and a half. So buy the $20 call and sell the 21 and a half, and you benefit on the difference in between the two. So that's just one particular scenario you've seen and have seen in the past. So that's why I like to drill into that, so we can kind of take a look at what's going on there. It could be somebody exercising. We just saw the spread that someone's running. So it's kind of always important, to grab that context there. Let's take a look at the 20 calls for November 15th. That was the one that had me most interested. Let's see, 6,451 volume yesterday against 13,000 open interest, about half the open interest. And then let's see, about 20, 30-ish% of that volume yesterday appeared new open interest. So OI now stands at 15,202, which if you times that by 100, because each contract represents 100 shares, that's where you get like the shares information that comes from, how many shares does that represent? That's where that data is coming from. It was 2 million in premium yesterday. Ask volume 2,354, bid 2,947. So kind of a combination of buyers and sellers there. So definitely something to take a look at. I mean, they're in the money calls. So somebody could just be capturing the premium because, for example, on October 25th, they were filling for about $135. And yesterday, $324. So, and I know I posted about these $20 calls a few weeks ago in the option flow report when we started seeing those come in via the open interest. It was just a little bit of volume. Yeah, October 4th, they had that first $1 million total premium that day, and then a big spike the next day in open interest. I talked about this in previous option flow reports. Let's see if we can back that out just a little bit, then we can actually see those larger entries on the chart here. See on the 30-day, that was that larger one, October 4th. Draw down, bought more, or sold. Definitely probably loaded this dip here. And then as it moved back up, you see the red bid, could be some profit taking there. A lot of these contracts are traded intraday, buy low, sell high IV, buy back later. So there's traders, there's investors, there's longs, there's shorts, all kinds of people within the stock. And that's what happens when you have a free and open capital market. So we're all free to trade in any way that we desire. Let's take a look at those $20 calls for January as well. Come back to the 1 day here. About 3,300 volume yesterday, but a decline in the open interest update. 1.6 mil in total premium yesterday. Bid volume 1,800, ask 1,198. Some of these contracts could have changed hands. Somebody could be getting out. Somebody could be getting in. They are in the money, could be exercised, could just be waiting. The IV is around 81%. Today was 86 yesterday. But those are in the money calls with time to expiry. Another thing to consider too is, for example, say I was short the stock and I need to buy some stock back for GameStop, and I don't necessarily want to purchase maybe a large amount of stock, in an attempt, I want to preserve my price that I'm trying to buy back at. For example, say I purchased an in the money call and exercise, now I have shares and I can return those shares at $20. Sure, I have to factor in the cost of my premium, but those are just, different scenarios depending, some people exercise to obtain the shares long. Sometimes call options, put options are used for hedging, aka against short positions. So just always something to think about. We'll take the last look one here at the 1.06 mil on the $23 calls for this week, which went in the money. So there's, let's see, they were filling yesterday. I mean, pretty close right at the low at the open, around 50. I know they opened 84. Price retreated a little bit, which I'll talk about that too, was somebody that was buying and selling puts, or selling puts and buying all in the same very quick. They got blown out for about a $20,000 loss and then came back to it, but kind of changed. They kind of created their own level of activity, and as soon as the put selling came in, the shares that are hedged with the market maker, the options dealer, they sell off those shares against that hedge and then brought the price down, which kind of then ramped up the cost of the puts they had to buy back. But let's see, we did see those come in on unusual whales yesterday, kind of at the top where some people were selling. Let's see, around the 93 level because they were alerted for volume greater than open interest, which is something we look for. And then wound down here to about 53 into the close. They were filling right around the same kind of price they were filling towards the open. IV yesterday was 86%. So we'll see what those do today. The problem is, even though the stock may move up with theta working against you, these expire on November 1st, the stock may even move higher, and your call option could come down due to implied volatility. You're burning some theta. So always things to keep in mind. You're thinking, wow, well, I bought those yesterday. They were cheap, but the stock's higher. My premium should go up. And in theory, you're right, but that's not all the time. Not always the case due to implied volatility. So always be careful with that. Use risk management. Cut your losers quickly, and always take your gains quickly because it can change very quickly. And we'll take one last look here at these $25 calls for January. Saw some volume yesterday, but then that's not reflected in new open interest today. So that could have been somebody just cutting a position, trimming a position. Always something to take a look at there. We try to look. I sometimes try to look and go back to the activity to see where we're at here. You know, if anybody was in here buying these at 200, they certainly most definitely might have trimmed at 300 and 350. There's nothing wrong with trimming some contracts and letting the runners run, I say sometimes. But let's take a look at the open interest updates this morning here. See what our largest changes were. And I know you've seen me post this before, so it might make it a little bit easier just to see it here in real time. All right. So our biggest changes here, I'll zoom this in for you. You're welcome to screen grab it or pause it. So your largest changes today, not big changes. You had 45 calls for November 1st. Could be sellers and the buyers and sellers. We had the 20s we talked about for the 15th. 24s for November 8th. Those are kind of at the money. And next week expiry. Let's take a look at that actually. They came in right at the close. Somebody might have been selling. Bid volume 1742. Ask 1227. It was alerted for volume over open interest. Volume yesterday 3081 plus 1974 in new open interest today. So yeah, I mean they're at the money. At the 24 last night they were in the money, but they're close, you know. So we'll definitely take a look at that. With this high bid, somebody could have sold those into the close. Just because of change in open interest there with some buying. So you can see that candle. A little more bid side than ask, but sometimes that's based where that's denoted is where it filled in relation to the bid and the ask at the time. And sometimes when a lot of contracts come through, it can adjust that bid and ask very quickly. Let me get back actually to that. I wanted to talk about that just for a second where I just spoke about the put seller yesterday. I had to quickly come back and buy in. See if I can find that again real quick here. Let's see here. I know I was being funny yesterday with some memes. Listened to a little Steve Winwood yesterday. Yeah, there was the transaction. Looked like someone sold $23 puts for this week and then quickly bought to close and lost $20,000. So how that happened is you can see here right at the open. Looks like somebody sold the 23 puts, which is bullish in nature, for about $110,000 in premium. However, like I said, they created their own level of activity. 1,000 contracts come through times 100 shares. That's a little bit of activity that they created, and then boom, some downside pressure as they probably got faded by the market maker, the options dealer, and then you can see that price jumped. So they bought back at 131 at 130. So my guess is they sold them. I mean, not a bad idea. Good strategy. Thought the price would continue going up, except it retreated down, and then you had to quickly manage that position and basically spend $20,000 real quick to buy those back. Now, yeah, see the 110,000 there, and then assume bought to close 130. So kind of a quick loss of 20,000 happened very quickly, and then here were those fills. I went ahead and included them. You can see where they were filling them, which is a bullish in nature. They're selling puts at the bid very quickly, just right at the open, which sometimes you got to give it some time, let things adjust, because if you don't, that's what can happen. And then you can see here, signals bearish because they bought them back real quickly. 131, 127, 121. So see the price was moving all over the place compared to where they were selling them at. And that can happen. It's limited liquidity at first until things going on that particular strike. But you can see the premium there, 242. So in and out. Let me look actually at the 23 puts for this week because I want to make sure. I want to actually take a look at that open interest. So one way we can do that real quick is we finish this up. We'll take a look at the chart here. So we'll go with our handy dandy contract lookup. We'll go to GME and we're looking for that expiry for this week, a put. And the 23s is what they did. We'll add that. That's also now here in my watch list, which I can go back and easily view. And we can see the open interest might have changed hands there, plus 822. So definitely take a look at it. There was some volume there yesterday. Might have tried it again later in the session. So we'll take a look at that. But a lot of times these contracts will trade hands too. So we come back over here to the chart. Let's turn off the extended hour data. Let's zoom it back out to the daily. We talked about during yesterday's video how it's getting real tight down there, especially when you look at, for example, the weekly. It's starting to get tight, starting to get some attention. So, come to the daily. We talked during yesterday's video. We're looking for that kind of strong move, which we saw Monday with a close above the 50-day SMA. Now, I like to use on my charts a 9 EMA, a 20 EMA, a 50 SMA, and some volume. I'll do levels, Fibonacci, etc. So let's see, as of yesterday, the 9 EMA at 2153, the 20-day at 2139, and the 50-day at 2157. So two closes now above the 50 SMA. You've got this 21, or pardon me, the 20 going over the 9. Pardon me, some allergies here this morning. It got cold on us and then got warm. And yeah, I know the Midwest vibe, they're still doing all the farm fields and all that stuff. That's how it goes sometimes. I just wanted to zoom in, kind of take a look at that here. It's just been tight for a while. This was definitely a catalyst, yesterday with the Roaring Kitty news. It's something to keep on watch as we just want to watch continued volume. We'll see what that candle does today. It's extended hours. Let's see, 23:30 right now in pre-market. Still up and still trading above the 50-day. So just something to keep in mind. Because we talked about yesterday, the last few times we were above the 50-day. Didn't work out as well. Some tests of the 50. But this is different. A different catalyst, different time. GameStop still has $4.6 billion in cash. Something to always be thinking of, too. GameStop, their charter allows them to issue up to 1 billion shares of commons and 5 million preferreds. Current shares outstanding is 446 million. So naturally, I'm to assume, as a lot of people are, any big run or any big movement with GameStop could introduce, another offering from GameStop. They have that S3 on deck from May, so all they have to do is post an offering, and boom, they can get shares rolling. And in this case, it's not going to debt or, other capital expenditures. When they raise money, it's just straight going to cash, which they've probably been using to buy treasuries or just collecting interest off their cash. 4.6, roughly almost $5 billion. So definitely some things to watch. And like I said, the catalyst, we'll see if Roaring Kitty posts anything. Everybody's been looking, I know, for YOLO updates. I continuously, will always be combing the SEC website, obviously, for new filings or anything like that. So when you can just Google search SEC Edgar is the name of the website. You want to do company search. You just come down here, search by, say you want to look at GameStop. You can just pull up GameStop, and then here, boom, all of their filings. You want to look at ownership disclosures, changes in ownership. You want to look at when Daniel Moore was selling stock, you can do that. And make sure you always look at the footnotes. What's down here in green, because that adds to that. So, yeah, just some things to always look at, where they're at. Just a little action for you here this morning. So keep your eyes peeled. Manage your trade. Trade. Exactly. Manage your trade. No, plan your trade. Trade your plan. Manage your risk. Capital preservation above anything else. Cash on the sidelines is always a position. But you know how these things go. When GameStop starts getting real exciting, sentiment shifts, you never know what can happen. So always take everything with a grain of salt. Take it day by day. Try to keep the emotion and the bias out, even though it may be exciting to you. Just try to look at your levels, the option flow, the volume. Try to look at what we do know, what we can put our minds on. Speculation is fun, and to be honest with you, sometimes speculation is an opportunity and presents an opportunity for profits and loss as well. But just always, do your due diligence, do your own homework. Don't turn in my homework because I know you're all smarter than me, and I wouldn't want you to fail. But hopefully, you guys enjoyed the video. Please share it. Unusual Whales is having their sale through tomorrow, 15% off. Use the link if that's something you're interested in. Save some money on a subscription. If not, no hard feelings. We'll still continue to make videos, talk about the flow, and work on the flow together. So I hope you guys do have a fantastic day. Oh, I love this. I got to come back to it. It was so funny yesterday. Live look at the DJI short or DJT short sellers. It was just to be a joke. It was just to be a joke, all in good humor. I love that. That's one of my favorite ones, though. Because I know a lot of people, somebody say, I'd got some flack in the comments. I'm like, okay, fine. Sure. But any short that's at 20, 30, 40, or 50 has been underwater up until, this morning. So it's a little more expensive to maintain that position. But yeah, that was just the fun one yesterday. But I hope you guys do have a great day. Happy Wednesday to you. Happy trading. And stay safe out there. And I'll talk to you.